All right, what's up, YouTube? It is Saturday. The main topic I'm going to talk about today is price action. So, those of you that don't know what price action is, I'm going to go ahead and give you guys my way of price action trading. Now, this is Bitcoin to the US dollar here on TradingView.com, and this is on the weekly chart. What I'm showing you guys is the same level of resistance and support, but with every resistance and support, there's price behind that. With every candlestick that closes, there's always price that's closed, right? With everything that you're bidding and you're buying or you're selling, there's always price. So a lot of top professional traders talk about that they love price action trading and why they like identifying price action trading, because it's very useful. And this comes down to, if you really want to look at the main window, because some people like to use MACD, RSI, Stochastic, the bottom indicators. And I'm gonna run through a couple of scenarios here. Not on the weekly chart. Let me do US dollar to yen. Now I know the market just closed, but I'm gonna run down and I'm gonna show you guys the difference from using price action and if you were to use like MACD or RSI or Stochastic or the bottom indicator, like the bottom window that shows you the indicators of what's being overbought and what's oversold, and how effective price action is toward against the indicators. And so let me run through Stochastic here. Now, this is on the 4-hour chart, and obviously when Stochastic is above, to me, I would use 80 and 20 versus 70 and 30, because Stochastic likes to hit 100 and 0 most of the time. And so what I'm going to show you guys some what I want to say, the lagging of confirmations, like how every time it's overbought, how can you like sell and then try and shoot for Stochastic to shoot all the way down to 20? Makes no sense, right? And you can see based on price that the structure is just stuck at a zone here for USD JPY. So it's very important to understand that overall it's still uptrending too. So overall it's still uptrending. It was stuck, in a critical zone here, and then it bullied all the way up, creating a new high, and then created another level of resistance, and that price was set at 108.8. and you can outline this bullish engulfing candle here back here. That's why I'm going to talk about candlesticks on my next video. We'll talk about that too. This bullish engulfing candle already outlines the zone here. So if you love using Stochastic and you're trying to figure out if you're going to sell or buy, you're still going to try and sell it, because you're looking at that, oh, well, it's overbought here, it's overbought here, right? And you're looking at the price and you're like, oh man, it's definitely overbought, so I'm going to keep selling it. But you're forgetting the fact that price is being driven up, not down, even though that it is still back to a phase of consolidating at this price again. So that's why I love price action. Like I said, if you guys have watched my videos, even now, my current videos, I talk about price action, candlesticks, and everything that relates back to naked forex. And so it is very crucial to understand the main window, because the main window is moving, and the bottom window is if you really want to use indicators for what's being oversold and what's overbought. So I'm going to take off the Stochastic here, and I'm going to take this off, and I'm just going to hop down to the 15-minute chart here. And I'm gonna give you guys RSI. Give you guys the RSI. I'll take the RSI off and I will run into MACD. So with the RSI, right, on the 15-minute chart, I'm gonna remove my horizontal lines, right? With the RSI, 70 is overbought, 30 is oversold. Based on what I'm looking at right now, to me, if I was just based on price, I would sell, and I would shoot for this target right here, which is 108.6 and 108.58. Because this was a massive move all the way up to 108 points, almost 108.78. So that would be my first line to take profit. Breaks through that, then I would shoot for this one, right? The 108.54 and the 108.52. Now this is based on what I'm looking at on price action with the candlesticks. Now, if you look at RSI, then you're shooting for 30, right? Once it touches 30 or gets close to 30, then you would buy it back to 70. Does it work like that all the time? No, it doesn't. That's why when you use bottom indicators, especially when you're diving down, I'm not going to try and hop into like every different time frames, but let's just hop this to 1 hour on RSI. On the 1 hour, isn't really much to sell anymore. It already had its pullback, 3 candles going down. So unless there's like a major reversal, and you can see that the RSI is just kind of flatline here. Okay, it's flatline. It's not like angled down, and so it's starting to curve back up. When I used RSI back then, if it started to curve back up, and if the candlestick was starting to have a bullwhip, then I would buy. But that's if you're identifying with candlesticks. If you're not identifying the main window, whether it's price or candlesticks, and I'll talk about moving averages too, where moving averages lag the confirmation sometimes too, where it's crossing over or when candlesticks are completely reversing. You have to understand the reverse points. Based on this RSI here, here, let me show you. Right here, really good point, right? Really good point. So I'm trying to outline this. And then you can see how RSI tumbled down here. But if we were talking about price, you can see that price is just back to consolidating. And so very important to understand that if you were basing on the indicator of the RSI, the relative strength index of 70 and 30, and you're not looking at where price is headed or driven on because when price is driven up so high, then you're looking at the uptrend, and when price is driven down so low, you're looking at the downtrend. But you have to understand when prices are subjective to being rejection to the rejection points of support and resistance, or if there's a possible trend change, which is to me, if it's a trend change and it's a reversal point. And so it gets very, very confusing if you have a bunch of indicators and you're relying on what's being oversold and what's overbought, and then you're not looking at price action. The main window to me, and in my opinion, that is the most important window to pay attention to, because it's where it's going up and down in price. Nothing's going up, down in price or in value, whatever the currency value is, and at the bottom window. RSI is not telling what the price of US dollar is, or what gold is, or what the euro is. And so you have to understand what these indicators are telling you, if they are your primary or your secondary indicators that you like to use. For me, I don't use them anymore. So I'm going to hop into MACD. I'm going to take off RSI. And I'll use the 1 hour and the 15-minute on the MACD, just like what I did on the RSI here. So you guys can see here. And so with MACD versus using this MACD version indicator on TradingView versus your MetaTrader 4 app, which is a little bit easier to look at. So you can clearly see the histogram, the two lines crossing in and crossing over. Now you have to understand they're using the 12, 26, and 9-day closing moving averages. So this is not, like I said, to my, if it was my opinion, I would just strictly just go back to the relative strength index versus using MACD, Stochastic. I forget what the other ones are. Momentum, CCI. There's ADX. I looked at a bunch of other indicators that I tried too in the past. MACD is really awesome for long-term trading. Like if you were to, here, let me show you the weekly. Notice that what I love about using it on long term, you can clearly see when this crossed over, you can clearly see green, right? Bulls are in control. You can clearly see the uptrend that's starting to peak back up. But the most important thing is you have to understand that this is a subjective of critical resistance point, that 108.7, 108.6 area. So overall, it's been uptrending, and you can clearly see the double bottom formation here with the wick. So it's pretty interesting to see what it's being created here. Now, what I'm outlining on these are candlesticks pattern, right? And the formation of structure where trend is so volatile to reverse. Was it pivot points? So if you pay attention to to the candlesticks and you start pinpointing where price is being rejected, creating a lot of resistance, creating a lot of support, and line it up to where it's going to take you. If you like using MACD, like I said, I would prefer using MACD on higher time frames. And let me show you the monthly. Now the monthly looks kind of sketchy, but you can clearly see that it's in a really tight range because of this right here. So and you can see that overall it's been down, right? Overall it's been down. So USDJ4 hasn't never tested 124 since 2015. So, and you can clearly see how high it's been and went down and now it's stuck here. Let me show you guys the daily so you guys can understand this. So on the daily, people would, to me, right, you can clearly see a lot of resistance here again. And it's starting to peak really low. It's objective for resistance again and creating a lot more, hasn't broken above 109. And I'm talking about price right now versus MACD. MACD is still trying to reach a little bit higher. So, but I'm gonna hop back down to the 15-minute here. And it gets really confusing because if you're really not focused on the main window and you're just using MACD, then the question is, what are you trying to shoot for if you're using MACD? Even though it's going back down as a pullback, the question is, do you know what targets you want to shoot for? So to me, I would shoot for 108.6 and then 108.55. And I'm just breaking it down every 5 pips from there. And this is on the 15-minute chart. Granted that you're looking at, a pretty tight price zone, because if I'm zooming back out here on the 15-minute, there's a pretty strong price zone from 108.7 and all the way to 108.5. So you're talking about 25 pip price range. I'm not talking about the low points here. That doesn't mean nothing. what you're pinpointing is price gaps, price action with price gaps. That has to be another separate video, because I don't want to make this a full tutorial on price action, because it'd probably be like a 2-3 hour video. But this is pretty crucial that you have to understand if you want to if you really want to dive down and start using price action versus using indicators. If you are still using indicators, then you have to identify what you're looking for in those indicators that are your primary and secondary. I talk about primary and secondary indicators because some people have like 4 or 5 or 10, 11 indicators, and they don't even know which indicator is their confirmation, because they're looking at so many confirmations. You have to identify what your main confirmation is, especially when it comes down to using a lot of indicators. And that'll be another video too. And so I'm trying to, I don't know, it'd be kind of like a random, it's not like a full-on course or anything, or what do I want to say here? I'm not putting on a full, I'm not going to put like a full course or anything about price action or something, but it's I'm just going to put a lot more content, probably more random videos. And I know that most of the majority of you guys are looking for me to talk about more on technical analysis, chart patterns, formation structures, price action, naked forex, versus on the fundamental side. So number one thing why I'm talking more on the technical analysis side is because when you come in as a forex trader, you're looking at the charts. You're not looking at forex news. You're not reading up on forex news. All right, you're already diving in, looking at whether it be a 5-minute chart, 1-hour chart, 4-hour chart, whatever it is, and you're constantly looking at price going up and down. It's fluctuating so fast. That's where it starts. It starts with looking at the charts, and some people, you know, learn fast. Some people learn slow, but it all comes down to how much time is being committed here at the screen, so that you can eventually, right, identify what works for you and what doesn't work for you. And so more content come out for you guys. Like I said, I hope you guys are having a great Saturday. And that's it, guys. So I hope what I said makes sense. If not, I mean, like I said, I don't want to dive down and talk everything about price action and go from 1 minute time frame all the way to the monthly time frame. It just gets too confusing. And especially hopping in from one indicator to the next indicator. I'll even talk about why I don't use indicators anymore, but I already explained a little bit why I don't use indicators. And so that's it, guys. Peace.